right, everybody, welcome. We'll go ahead and get started here. Great topic today, talking about the upcoming election. I'm sure everybody's aware that one of those is here in about 60 days or so. Or wait, maybe more like 80 days, 90 days. But yeah, it's no secret that the market has been very volatile this year, but it's still up as of now, as of today. And election years tend to be positive years historically, for what that's worth. And no doubt there's a lot of chaos, changes are still there's probably going to be a lot of more surprises, my gut says, over the next couple of months, although we've had quite a few just over the last couple, with the Democrats changing their candidate and, of course, the attempted assassination and all those things, and more than likely more to come. Not assassination attempts, hopefully, but changes and chaos. So just kind of getting everybody ready for that. It is very important. We tell clients to remember that investment plans are not and should not be dictated by who is in office. If your candidate of choice wins or doesn't win, please don't fall victim to that. That's a terrible investment strategy. Now, today we do have a pro on this topic. It will not be me. I do keep up with a lot of this, but I don't call myself a pro by any means. We were very lucky to get this speaker to our firm. He's in high demand all over the world doing these presentations for investment banks and certainly not smaller boutique shops like ours. So we're very thankful to have Ed Mills today. Ed Mills is the managing director of Washington Policy, and he's here at Raymond James. Ed, do you want to? There he is. Ed, I will sign off.
When my cue is coming, I got it, David.
There you are. I'm gonna turn my video off, and what we're gonna do is we're gonna have Q&A at the bottom of the screen. So feel free to ask questions. We'll save those for the end. If we happen to see one that's very relevant and we catch it in time, we'll pop on and let Ed know. Otherwise, we'll do all the questions at the end. So without further ado, Ed Mills.
Yeah, thank you so much, David. So what we're going to talk about today, as mentioned, is the election. I will go through, in my perspective, what are some of the most likely outcomes. This is going to change between now and November, and there's a chance that you disagree with my opinion. That's fine, because I think the most important part of the presentation is thinking ahead to next year, some of the things based upon if there were to be a Republican sweep or a Democratic sweep, what are the most likely policy outcomes? What happens if it is a Trump victory with a split Congress, a Harris victory with a split Congress? We were talking as we were getting ready for this. We've changed a lot in our different election outcomes and some of how that goes, but we really haven't changed anything when we're talking about policy and some of the likely outcomes for next year. So let's get this started. And state of the race, as we know, Kamala Harris, the vice president, now the Democratic nominee. It's been an impressive campaign launch, something that arguably has exceeded expectations versus some of the concerns when I talked to people around here in DC prior to the launch. Raised record numbers, $540 million raised in the first month. Compare that, go back to 2012. Barack Obama setting a modern day fundraising record of about $150 million for his reelection. Just shows you just how much funding of elections have grown exponentially. We've kind of looked at this as a second chance for a first impression. Prior to the launch, she was underwater in the favorable versus unfavorable. We'll show you here kind of how that's improved. Immediate impact, down ballot, getting enthusiasm among the Democratic base. Impacts in House races, impacts on Senate races. The real debate for us here is clearly there's been a vibe shift. How much does that actual impact on the race kind of follow through? Get a lot of questions about her platform. This is an area where we don't have as much information as we would normally have for a candidate who's gone through a primary season, gone through a lot of sit-down interviews, gone through a lot of debates. We'll get some of that, but it's unusual, to say the least, that we are this far along with as little direct information. Generally speaking, our expectation is that if you had a policy under the Biden-Harris administration, those policies would largely be the policies of the Harris administration if she were to win. However, there's certainly going to be tweaks, breaks, changes. How much of that? We're still figuring that out. We did get an economic speech about a week and a half ago. focusing on housing. I think the interesting thing here is for the first time, we've had more of a focus, and this has been developing in the last couple of years here in DC, where more of a focus on the supply side, where so much of U.S. policy for years has just been focusing on the demand. How can we get people access to credit? How can we reduce the cost of that? And we see some of how that is impacted. We actually have a lot of folks that want to own homes where kind of the lack of supply drives up the price, kind of prices people out. Taxes, there's an expectation that a lot of what Biden has proposed is what she would propose. We'll talk more about that. Tax on tips, eliminating that, something that Trump has proposed, saying yes to that. To me, that's a good example of in politics when you're explaining you're losing. So she looked at that, said, let's not have a fight on that. Nevada, key swing state. It's a state that has a lot of employees who get tipped. So might as well say yes. And then cost of living, called for more aggressive action by the FTC on price gouging. To me, this is a signal that a lot of what we've seen over at the FTC in recent years, this populism that's in our politics, continues regardless of who's president. We have a couple of VP picks, and some of them are relatively unknown. So go a minute here on Walz, go a minute on JD Vance. Walz, vice president, or as a VP pick, governor of Minnesota, former House member, teacher, coach, member of the National Guard in Minnesota. A lot of this, I think, was much of a vibe kind of match for Vice President Harris. Certainly, Minnesota should not be a swing state, will not be something that really is in play. That's where a lot of folks thought that Governor Shapiro from Pennsylvania was a better political pick from a kind of electoral college map. He further energizes the base. I think where we probably, from a policy perspective, would be looking at Walz's impact is that in Minnesota, you've seen Democrats have a pretty aggressive tax policy, have raised taxes over the years, and won re-election and use that revenue on services. Walz will say, for Democrats, they should be a little bit more aggressive or a lot more aggressive on some of the tax policies if they were to win. Vance, JD Vance, senator from Ohio, rose to prominence with a memoir, Hillbilly Elegy. In many ways, JD Vance as a Republican vice presidential candidate is not your traditional vice presidential candidate for Republicans. On M&A, we talked a little bit about the FTC. He said the head of the FTC, Lena Khan, is doing a pretty good job. The business community, that's not something they like to hear, that they would still be as aggressive on approval there. On tech, it's called for some aggressive antitrust actions. On banks, co-sponsored bills with Elizabeth Warren. You don't see a lot of Republicans partnering with Elizabeth Warren. So I think it's a bit of trying to figure out what this means for policy. On the geopolitical, Vance was someone who was aggressively against expanding aid to Ukraine, but has been a staunch supporter of Israel and said that the weapon systems that were going to Ukraine should be going to Taiwan to defend itself. So very much a China hawk on that ticket. As we look at the election, as a reminder, this is not a popular vote contest. This is an electoral college vote contest. The market talks about the Magnificent Seven. We have the Magnificent Seven from a swing state perspective: Arizona, Georgia, Pennsylvania, Michigan, North Carolina, Nevada, Wisconsin. You go back to 2020, 45,000 votes switching to Trump between Georgia, Wisconsin, and Arizona would have given Trump this election. So even though Joe Biden had a 7 million vote lead in the kind of popular vote, it really came down to 45,000 votes. When I'm looking at the kind of map here, Harris on this can win Arizona, Nevada, Wisconsin, and Michigan, and she's at 268 electoral college votes. That's why Pennsylvania, Georgia, and we'll add North Carolina in here. It's kind of emerged in the last week more so as an electoral college toss-up state. That's where those states, Harris probably needs to win one of Pennsylvania, North Carolina, or Georgia to win the election. Trump has to win all three. So how much of this is about Pennsylvania? When we look at the polls, and everyone always asks me about the accuracy of polls, and we'll talk about that in 2 slides. But polls, to me, gives you a sense as to what neighborhood are we in. It doesn't tell me the exact address, but it gives a sense as to directionally where things are. At the national level, it's pretty tight. It's kind of been an area where Harris has closed the gap, and in some polls is now leading, and we'll see how much the convention bounce that we've seen some since then, kind of that are a little bit higher. But in the swing states, man alive, is this really close? When we look at Pennsylvania, at basically tied in a number of these other states like Arizona. That said, when I look at kind of some of the data, I always like to look to say, all right, well, polls tell us one thing, is favorability ratings telling us another? It's one of those things about politics. When you like someone, you tend to vote for them. If you don't like them, you tend not to vote for them. Prior to Harris being at the top of the ticket, we had what was a group of known as the double haters, double dislikers, where about 20 to 25% of the population had a negative opinion of both Donald Trump and Joe Biden, and who could win over the people that didn't like them was going to win this election. It kind of comes to a question of, like, when we look at the favorability ratings for Harris, she's been able to have right now a favorability rating in the high 40s, almost at 50%. That could, portend a pretty decent election outcome, at least on the national level. Trump, his favorability ratings is more in the mid to high 40s. One of the big debates out there for us in politics is that, I've described Trump a number of times as a high floor, low ceiling candidate. He has an intensity of support in his base. RFK Jr. dropping out of the race. Those voters early on are, data shows that that's probably going towards Trump. But does he need a couple of percentage points from other candidates to make sure that he's able to win from some of those swing states? Looking back, 2016, 2018, not able to get at that 50% in many of those states. So I mentioned this kind of outcomes back in 2016, 2020, looking at polls. The data suggests that in 2020, Trump underpolled by about 3% nationally. So if things are tied and we had that same error, that would be an argument that Trump's up by 3%. Back in 2016, Trump underpolled by about 2.6%. And then in the swing states, Trump underpolled dramatically in the swing states in 2016. It was closer in 2020, but it was still an underpolling. Kind of Wisconsin, underpolling by 5%, 7% in those states. So that gives us a lot of pause as to give too much certainty to some of that polling data. But a reminder, polls can be wrong in either direction. Back in 2012, Barack Obama won re-election in a stronger than anticipated way because the polling error all favored him. And we've seen since the Dobbs decision overturning Roe v. Wade by the Supreme Court, Democrats have been underpolling, kind of outperforming in the final expectation. So that to me is one of the big questions I come into kind of 2024 here, is which direction does this go? A race for the House of Representatives, you need 218 seats to have a majority. Republicans have 220. This is really close. Generic ballot favors Democrats. There's been some redistricting that favors Democrats. Our view is that Democrats have a slight advantage in the race for the House. All 435 of these seats are on the ballot come November. Race for the Senate. The Senate term 6 years. Every 2 years, a third of the Senate's on the ballot. Democrats have a 1-seat majority, 51-49. Joe Manchin is retiring. That's going to be a Republican seat, Jim Justice. So it's essentially 50-50. You look at the number of seats in play. Democrats are defending 23 seats to 11 seats for Republicans. This is, going back 6 years, 2018 midterm election for Donald Trump. It was a great year. in the Senate for Democrats. That was kind of their high watermark. You look at this map, you look at these races, it's probably about a 75% probability Republicans have a majority after this. But, it's really comes down to probably, can Tester hold on in Montana? Can Sherrod Brown hold on in Ohio? Does Ted Cruz or Rick Scott have a race in Florida and Texas? Those are the four races I'm watching the closest to determine the outcome. So we've kind of come up with these revised election odds. Earlier this month, we had moved the odds in favor of Democrats at the White House. This matchup, you can make probably a pretty strong argument. It's 50-50 at this point for the White House, given this kind of closeness in those races. Democrats have a slight edge in the House. Republicans, I told you, had the edge in the Senate. We think it's about taking that. If Donald Trump wins, we think there's a even higher chance that there's a House there, a 50-50 Senate with the tiebreaker for the Senate going to the vice president. The GOP sweep, in our minds, about 40% chance, about a 15% Trump victory with the Democratic House, and about a 20% chance of a Democratic sweep, and 25% of Harris winning with a Republican Senate. So I'm going to go into some of the key issues that we're watching here, and if you have any questions, feel free to populate that. But the first thing that comes up in any conversation is that when we look at 2025, we have twin fiscal cliffs of January 1st brings back the debt limit, December 31st has the expiration of the tax changes from 2017. As a reminder on those tax changes from 2017, the corporate tax rate of 21%, that was made permanent. It was the individual taxes that expire on December 31st of next year. If Congress does nothing, the standard deduction goes down. That cap on state and local taxes at $10,000 goes away, changes on S Corp. So my general view is that whoever wins the presidency probably dictates this debate. And when they did this in 2017, there was a sense that Democrats would probably be forced to kind of come to some level of compromise on the extension of this. And where that could be wrong is that when I talk to Democrats on the Hill, they're like, all right, well, if we do nothing, taxes go back for individuals to where they were under Barack Obama. And for a number of them, they think those were kind of too low anyways, because it was a compromise between Obama and congressional Republicans extending out the George W. Bush tax cuts. And for a number of them who represent kind of California, Illinois, New York, a lot of high cost, high tax state, this removal of the SALT deduction is actually a reason for them to kind of let them all expire, because that's $1 trillion tax relief for individuals in those states. So if there were to be a Republican sweep, that's where it's most likely that they get extended. If there's a Democratic sweep, that's where the market gets cautious, and most likely that a number of them expire, and or kind of one of the ways to make sure that the middle class taxes don't get changed and those deductions don't get changed, you could see an increase in the corporate tax rate. That's something that Democrats have run on, and it's actually interesting because the Republican head of the tax committee has said that a number of his Republican members have also said increasing the 21% tax rate might be on the table as well. Beyond taxes, the other big thing that has been playing out on the election conversation has been if Trump wins, he has promised that there is going to be a 10% tariff on all goods globally and a 60% tariff on goods coming in from China. Are we going to restart the trade wars? If I had to rank order areas where I think we could have some of those trade wars, number one, it would be with China. Number two with Mexico. Number three is EU. And number four is the rest of the world. Do I think that he comes in and just does this day one? I think that's unlikely. There's some folks in his orbit that are pushing for that. What I do think, and the thing I always talk about with tariffs, and I talk to a lot of former trade staffers for Trump who negotiated the U.S.-China deal, who kind of are these trade experts, and they say, let's have the conversation about tariffs, but really the conversation about tariffs are what are the policies that a Trump presidency is trying to achieve. Now, Trump thinks that China does, kind of devalues their currency too much. So putting a 60% tariff on Chinese goods, could you get the Chinese government to change the valuation of their currency in exchange for getting those tariffs off? Trump clearly wants NATO members to pay more of their required defense budgets based upon the NATO alliance. Does these tariffs use this as a stick to get them there? Does Mexico, where we have the USMCA up for negotiation next year, we have something known as the Mexico backdoor, where you could send a good to Mexico, get the last period of transformation, then send it into the United States tariff-free? Do we try to close down that backdoor for tariff-free items in exchange for not putting tariffs on Mexico? So I would view this as the reason to kind of look at that. I do think there will be a conversation in the market of, like, with the trade wars, is that kind of an inflationary pressure on the market. The third thing I would focus on is that there's a bill that passed under the Biden administration known as the Inflation Reduction Act. The most important thing to the market for this is there's a lot of tax credits in this bill to have energy transformation in the United States. And a lot of those projects are being done across the country in red states, in blue states. If Republicans were to win, the ability to repeal that and get that kind of savings could be something that is attractive to them as they're trying to pay for the $4.6 trillion worth of tax cuts. But the reality is I don't really see this changing all that much, because the investment in the United States and rebuilding the industrial base of our country is something that has a decent amount of bipartisan support. And I think if actually anything, you could see further deregulation to make sure that we update our transmission lines, our electrical grid, making sure that the United States is energy independent, something that I think both parties actually support, something I think that could be part of a debt limit deal some point next year. Healthcare policy, get a lot of questions about this, just because healthcare is always such a debated point in DC. First and foremost, another thing that expires at the end of next year is that right now, because of the push to negotiate drug pricing, the Congress got savings from that. Those savings are being used right now to subsidize less expensive healthcare insurance off of the ACA exchanges. That money expires at the end of the year next year. If Republicans sweep that, as they're looking to spend money, I don't think they're going to do that. So the number of people who have insurance off the exchanges is going to go down. So stocks impacted by that could feel the impact. Flip side, if Democrats sweep, the number of prescription drugs that would get negotiated probably grows. They've said that that's what they do that, and that's where kind of pharmaceuticals could kind of have that volatility. The other thing is that Medicare Advantage, the Biden administration has been pretty slow to increase the reimbursement rates. Republicans support Medicare Advantage reimbursement rate increases more so. We saw this play out in companies like United Health, where once they got that lower than expected reimbursement rate, that was the worst day for them. Kind of a little bit more in the weeds than we want to go, but just say, like, it's a very nuanced conversation as it relates to healthcare policy. Financial issues. If we were to see Trump win the presidency, we'd have the largest changeover in bank regulators in our history. Everyone changes over with the exception of the individuals at the Federal Reserve. And so that's where people look at financials and say, all right, that's an opportunity, especially if we're getting into an area where economic growth could pick up. If there is a continuation of a Harris administration, a number of these people stay. Some of the regulations that are being pushed go through. The one thing I would say about regulation, the Supreme Court really changed what the regulators are able to do through some new court decisions this year. So some of the concerns have been abated by the Supreme Court that are outside of the outcome of this election. Tech issues. Here's an area where tech has not been historically something that has gotten a lot of regulation out of DC. We've been focused on kind of three buckets in my mind. Semiconductors. There's been both carrots and sticks. We're restricting some exports for national security grounds, but we're also incentivizing the development of that here in the United States with the CHIPS Act and trying to make sure the United States is, once again, the leading producer of semiconductors. On AI, I think there's a lot of interest here, but what I tell folks is that when we hear things like more regulations coming, sometimes you have what's known as too small to comply. So the larger tech companies usually end up being the winners. Antitrust, I think it continues regardless. Big equals bad, populist push in our kind of politics right now. So a little bit of caution, but from a market stock impact, I think what works in tech will kind of continue to work based upon the fundamentals, less so on the policy here. Finally, on a policy perspective, is the geopolitical impacts. This here is kind of, as I look at defense funding, we've seen a situation where the script has been flipped a little bit. I used to say, all right, if Republicans are in charge, that's more defense spending priorities. If Democrats are in charge, that's more domestic spending priorities. What we saw, say, on the fight for additional aid for Ukraine, Israel, and the Indo-Pacific, it was Democrats who were pushing for that, and it was the Republicans in the House that pushed back and held that up. So that's where kind of the Democratic White House and split Congress, where Democrats would control the House, which was the thing that was the hardest to do, is green here. I think because things are heightened from a geopolitical perspective right now, defense funding likely to go up kind of regardless. Finally, from me, before we turn it over to questions and I go through this is kind of what David kind of highlighted, is that in election years, this is the orange, the market on average is up, the S&P 500 is up about 6%. We do have periods of volatility. That's when we have the most uncertainty. Frequently, it's at the beginning of the year when parties are choosing their nominee. We didn't have that because we kind of knew who the nominee was until we didn't know who the nominee was. We sometimes get that again as we get closer to the election, so don't be surprised if that comes back. But what's interesting to me is that the year after the election, once we have the certainty, the best year for the markets is usually the first year of a presidential term, which usually starts right after the election. Once we know what we're working with, and I can come up with reasons why it's good for the market or bad for the market in almost any scenario, we usually have kind of things that people feel are good for the market after the election. I think that will play out again this year. That I'll go through the disclosures and see if there are any questions. I'll turn it back over to you guys.
All right. Great job, Ed. Very helpful, a lot of detail. Let's see. There are no open questions right now, which means you did the most amazing job ever. Or you just answered everybody's questions. Both ways you did a great job. I don't see, if anybody has any questions, feel free to type them in. I know that he covered a lot, very thorough. So hopefully you got some of your questions answered. Of course, you can reach out to me, Miles Carson, and the team if you have questions on how this impacts your plan, which is the answer is it. Hopefully you saw on the last slide, it really doesn't, minus some potential tax ramifications and maybe social issues and things that you're passionate about. We'll continue updating you. We will send out, hold on, I think we got one question. We will send out a replay of this as well, if you want to listen to it again and maybe spend more time on some of the slides. Okay, one question here. Help me understand the impact that the executive branch has on inflation.
It's a great question. Lot of debate. No definitive answer. I think that it's a combination of factors. I think it'd be, if I looked at it from a perspective of what does fiscal policy have on inflation versus the executive branch alone, I think you can argue it can be kind of a accelerator of inflation. One thing that I think back to when I was a junior staffer on Capitol Hill, my job was monitoring for my position a lot of the money that was going to New York after 9/11 and the disaster relief, and that was a unbelievable sum that we were never going to see again of $20 billion. And then, fast forward a few years, and I was working on the Financial Services Committee during the financial crisis, and we needed to do an unbelievable sum to, and that grew pretty quickly. From the start of the Trump administration through the Inflation Reduction Act, Congress either did through tax credits or additional spending, $9 trillion more than we normally do. And so to think that didn't have an impact on inflation, I don't know how intellectually honest that would be. I look at inflation in the United States versus the rest of the world. And it seems to be slightly better here than other places. But I can't think that when you have the federal government spending as much as they have and much higher than kind of trend does not impact inflation. And so that's, executive branch alone, they don't control the purse, but they can influence what is kind of approved by the federal government. And more regulation versus less regulation, how much business activity is in the country, that impacts it as well.
Got it. Thanks, Ed. Great question. I don't see any other questions. So again, reach out to us if you have questions, and we'll get with you on that. And thanks for attending. Thank you, Ed. And we'll talk to everybody soon.
Sounds great. Thank you, guys.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.